Welcome to the 10th anniversary of REIMAGINE 2021. Presented by Mousebelt. Coming up next.
I'm Peter Wall. I'm the CEO of Argo Blockchain.
Hello, and welcome to REIMAGINE 2021. This is our one-year anniversary and 10th edition of our conference. We host these events as part of our monthly series, bringing you nothing but the best projects, bright minds, and leaders in the space. We've been fortunate enough to invite many talented individuals and teams to come speak with us, providing updates, insights, and all the above that's happening in crypto. I'll be your host today, Adam, from the Mouseball team, where we focus on early stage investments through our accelerator or providing development support to a number of growing projects, as well as education within our Mouseball University program. Our main objectives and goals are pretty simple. It's increasing adoption, use cases, and real-world applications. We seek to educate our audience on blockchain by helping them understand crypto's real impact. So I'll go ahead and stop talking there. We have an exciting guest, a first for myself, actually, in terms of what we'll be speaking about today. So I'm super stoked about that. Peter Wall, CEO of Argo. How you doing, man? Appreciate you taking time out of your day to join us.
Thanks, Adam. Nice to be here.
Awesome. So REIMAGINE, this is our one-year anniversary. Lucky you, right, to join us.
Happy anniversary.
And I don't think you've been on before, right? You've never been
No.
spoke here. Yeah. So this is cool. REIMAGINE was born out of COVID, video content. You know, we're in this bubble. Everybody knows about crypto. What else can we do, Mousebelt and our team, to kind of educate and acknowledge a lot of the things that we've been focused on and working on in the space for quite some time? And everybody that's come through has a unique kind of how they fell down the rabbit hole. What is your story in terms of how did you get into blockchain? And would love to hear about that.
I think everyone's got a unique story. I think my story is a little unusual because it took place outside of North America or Europe. I was actually living in Indonesia, in Bali, running a co-working space, the first co-working space that launched in Bali with a couple partners. And this American guy walked in, and it was 2013, 2014, and he started talking about this thing called Bitcoin. Wow. And I'd heard about it, but I didn't really know anything. And he was an evangelist. I mean, this guy was the real deal. He'd left his job in like the US in payments, and he'd moved to Indonesia, and he was like spreading the gospel of Bitcoin, literally.
For sure.
And, so we were a co-working space. We were into technology. We had a group of digital nomads from around the world. Even before anyone knew what a digital nomad was, we had them in this space. And it seemed like a great fit, right? We were, sending wires internationally, getting payment in various currencies. We were like, there's something that's digital, that's like native to the internet that we can use. So it didn't take him long to convince us that we, Bitcoin was a good thing. And we started taking payments in Bitcoin. We put in Bitcoin ATM in. He started having like these weekly meetups at the co-working space, which were really well attended. And then he started going around and kind of getting other businesses in Bali to adopt Bitcoin and to take payments in Bitcoin. And Bitcoin was trading at, between 150, 250 bucks then.
Yep.
So we took 33 Bitcoin in over the course of a year and a half. Yeah. And we traded it, Adam, into Indonesian rupiah on a weekly basis to pay for the bills. So
for sure.
And look, everyone's got one of those stories, but that's how I got into crypto.
That's awesome. I mean, we're still following like your lead right there. We have a co-working spot as well here in San Francisco. We're still hosting meetups. That's kind of the peer-to-peer, right? The active, the activity, the engagement that like Bitcoin, crypto, blockchain brings. for those tuning in, like you guys that's super early. What, 2013? I came across Bitcoin in 2013 too. I was working at the bank then, at the private bank, and somebody was buying $100,000 worth. And I was like, what are you buying? Wow. Like, is this fraud? Like, you know where this is going? And he said, my brother-in-law says I should buy this. Obviously, you know, the rest is history. Hopefully he didn't sell. But yeah, it's kind of crazy. And for those tuning in, like, it seemed like you guys caught on a little. That's so early, right? And we're still trying to figure, people are still trying to understand it 10, 11 years later. Yeah. What is it, before we get into kind of Argo and what you guys are doing, because it all plays a role, you know, what is it about Bitcoin you think that is so cool? Is it the access to you know, self-sovereign, like your own bank? Is it democratizing a little bit financial freedom? How do you see Bitcoin or blockchain? Is it one and the same for you? And what's your views on that?
Well, just to start with the last one, I see blockchain as like the killer app. Bitcoin is like the killer app of blockchain, like the, you know, the OG app, and the on-ramp for a lot of other, obviously, crypto projects, and then beyond, you know. But for me, Bitcoin, I always was attracted to the decentralized nature of it. Living overseas at the time, having to deal with banks in Indonesia, having to deal with banks in Canada, where I'm originally from, where I live now. It's just not a good user experience. They take too much. It's just not a good experience. So being able to cut out the middleman and just kind of have a direct relationship, a peer-to-peer relationship with money, I think that's always been the attraction for me. And I think that's why I'm excited about DeFi, because it's like taking that to another level. Now Argo is obviously, we're a crypto miner, and we'll get into what, you know, mining is and how that all works, and our kind of view of the ecosystem. But it's just amazing how far it's come in the last, you know, 10 years, and how much further we have to go.
No, for sure. I mean, it does. It's hard to pinpoint what's so cool about blockchain, and not only that, the app of Bitcoin, or the killer app in terms of like that specific use case, which, you know, spans across the globe, borderless, decentralization, right? Managing your own funds, which is great. And actually, we were in Bali for quite some time too. Not as early as you, but a lot of 2018 and 2019, nice. Just kind of hanging out there and doing the same thing, right? So no, that's cool. So let's get into Argo a little bit. We're talking about this decentralization aspect. We have a lot of viewers and audience, right, that are students, that are industry professionals that maybe are exploring kind of the mining world, and then just other people that are understanding what miners do, right, for Bitcoin. So give us, what is Argo, and what are you guys doing?
Well, I'll talk first, maybe just quickly give a brief explanation of mining, because we shouldn't assume anyone's knowledge. Everyone's got a different take. But miners are essentially, you know, the verifiers or the auditors of the network. And in exchange for that verification work, they get paid, they get rewarded with Bitcoin. And the way in which the process works is when you send a transaction from someone else, from one wallet to another, it gets blocked together with other transactions. It gets put out onto the network to be verified, and there's a mathematical equation that's attached to that, which is the work that needs to be done, which is the solving of that mathematical equation, which is a challenge because the equations are very difficult. And miners essentially compete to solve those equations, and in order to do that, they need very high-powered computers. So that's why we have these very specific mining machines. You've probably heard of them. They're in, you know, these large data centers or mining farms. They make a lot of noise because they have a lot of fans to blow air through them. But essentially, that's the business model. Miners buy machines which verify transactions on the network, and in exchange for that verification work, they get Bitcoin in the form of both Bitcoin rewards, which is, you know, awarded to each block of transactions that is solved, which is 6.25 right now per block. And then there's also transaction fees, which is kind of like your bank fees. You know, when you're sending a Bitcoin, you'll see, or sending in any kind of Bitcoin, you'll see like a transaction amount. That amount also goes to miners. So that's essentially what we do. And, you know, the kind of key piece of it is to try to get access to low power and access to machines. Those are the two things you really need to mine. And the machines are expensive because they're very profitable and they're these kind of specialized, specially built computers. And access to power, it can also be challenging because we use a lot of electricity to mine. Argo, we use in the area of about 35 megawatts right now. And we're building a much larger facility in West Texas, which will take 200 megawatts. And that's a lot of juice. So to be able to get access to that amount of power at a low cost is super key. For us, renewable power, because ESG is a key part of what we do as a company. And then obviously get access to machines at the right time, for the right amount of money. So I think you're muted again, Adam.
Sorry. How does thank you for that, right? And you guys are talking about massive facilities and operations, and we'll just kind of stick on maybe the energy front a little bit, or this borderless thing. Bitcoin is all over the world, it's decentralized. So is the mining operations all over the world. Is it kind of just, are there some regions that are not favorable, jurisdictions? Because I know it's a big operation and a big investment to come in and do all this, and the margins, right? You got to be like pretty organized and efficient and effective. How do you see? I know China, there were some things going on over there that kind of affected everybody else. Positive, negative, we don't know, but probably positive in certain aspects. But yeah, you're in Canada, you're going to operate in Texas, and maybe we'll just stick with Argo. Like, what's kind of the strategy there, and maybe why Texas and not somewhere else?
Yeah, I mean, I could talk broadly about places to mine and regions for mining. I mean, traditionally, and you say traditionally, Bitcoin's not been around that long, but traditionally, you wanted to mine Bitcoin in a cold climate because you don't use air conditioning to cool data centers for Bitcoin mining because it just costs too much to cool it. So you use natural air ventilation from the outside. Yeah. And what's the best place to do that? Well, somewhere where it's naturally cold outside. So you've probably heard of Bitcoin mining in Iceland or Scandinavia or Quebec. All of which were popular destinations for crypto mining, especially during the last bull run in 2017, 2018. And then obviously China, seasonally in the rainy season next to Sichuan or Sichuan province, where there's a lot of cheap hydro. And then in the winter, they go up to kind of northern parts where there was more coal powered. Now, what's happened is that China has banned Bitcoin mining. And so 90% of the hash rate, which was over 50% of the hash rate on the network, has come offline, and that hash power is looking for somewhere to go. And so it's migrating to places like Russia, Kazakhstan, and North America, specifically North America, because power costs in North America are actually relatively cheap if you get the right deal in the right place. And the big place that everyone's looking to, including Argo, because we're one of the first companies to announce a facility there, and we've already broken ground, is in Texas. And that's because there's a specific kind of grid in Texas that is competitive. It allows people to sell power back to the grid or give power back to the grid, and in exchange for that at peak demand times, and in exchange for that kind of get discounts, get rebates on the rest of your power. And the concerns about heat that used to be a big concern for crypto mining are less of a concern for two reasons. One, because the machines are just more efficient, they're more powerful, they suck air through them. So if you want to use air cooling, you can do it in Texas. It's a challenge. We're building an immersion facility in Texas, meaning we're actually putting the machines in a liquid and cooling them by pulling that liquid in and out of the bath that they're sitting in. And that's called immersion mining. Immersion computing. It's been done for a while, but it's now kind of scaling. The technology's getting there, and that's what we're building out, and we think it's a great innovation and a great way for us to keep the machines kind of safe for a long period of time, to keep them at the right temperature, and also to kind of push them a little bit harder so that we can get more hash power out of them for the same amount of power.
And what about some of this discussion that Bitcoin is just like consuming too much energy, more than certain countries or whatnot? I mean, and then how do you compare that to like a legacy system or some of the other energy that we use normally that, it's just kind of a bad rap, and they're trying to put this narrative on Bitcoin energy consumption as far as mining goes. Do you have any data, or like, how do you answer some of those things when people come at you like that?
Yeah, so Argo is one of the founding members of the Bitcoin Mining Council, and I don't know if you saw recently we put out some data about energy usage and how Bitcoin mining compares to other industries and you can go on bitcoinminingcouncil.com and there's that report is there. It's definitely worth looking at. I mean, I think what we know is in general, certainly with the power coming offline in China, Bitcoin mining uses more sustainable power, more renewable power than really any other industry. It's over 50% that Bitcoin mining is using renewable power from right now. So that's a really significant number. And I think so on the one hand, it's the type of power you're using. And then on the second hand, compared to other industries, I mean, I think the United States grid is about 14% overall renewable power at this point. So the fact that Bitcoin mining is over 50%, it just shows that a lot of the knock against Bitcoin using a lot of power is just FUD. And it basically comes down to, do you like Bitcoin or not? Do you think Bitcoin has value or not? And obviously we think that, Bitcoin and crypto has value. We think it's revolutionizing the way in which we interact with the financial system, and giving people more autonomy and all of the things we've talked about, and I'm sure that you're talking about all the time. So it's certainly something that people bring up a lot. And it's something that, we're working hard, especially, working to use renewable power whenever we can. And we're putting out our climate strategy very soon. In fact, by the time this podcast comes out, I think our climate strategy will be out. You can dig it out on our website. So there's lots of good things happening in the space around usage of power, but there's also a lot of noise out there that is worth kind of, looking at with a skeptical mind.
Yeah. And I feel like Bitcoin, has this way for us to explore for cheaper energy, other methods of finding, like you said, maybe solar, clean, whatever the case is. Right. And how soon do you see, it's kind of not a reverse psychology, but it's forcing us to really look at other areas for energy. And it seems like you guys are doing that. And how does the council play the role, and what do you guys discuss?
So we can talk about the council in a minute. And in terms of power, for Argo and what we're trying to do. I mean, we're setting up in West Texas, for instance, because there's a ton of renewable power there. 90% of the power on the grid there is from wind. There's a lot of solar that's coming on. They're doubling the amount of the gigawatts of renewables in the next 2 years alone. So it's an exciting place to be building out. And then obviously in Quebec, it's hydropower, where we have our other facilities. And so that's 100% renewable. So we're really making a commitment to using renewable power pretty much exclusively, and any power that's not renewable through legacy contracts or whatever we're offsetting or wrecking off using renewable energy credits. So that's on the one side. In terms of the Bitcoin Mining Council, look, it's a group of independent, competitors essentially, who are all, some of whom are publicly traded, some of whom are privately held. It's a mix of folks, and everyone's got a different take on energy usage. I think if you asked, 10 people on the council what their opinion of which is the best power source to mine with, or what's the right, is Bitcoin use a lot of energy or not, comparatively, you're going to get 10 different answers. So there's not a lot of it's a collection of competitors. It's a decentralized group of folks. So there's lots of different opinions. So the BMC doesn't have a take on power, other than to say they're gathering data, and the data that they're putting out is bringing more transparency to the space around energy usage, and trying to kind of put it in context, because there's a lot of, like you said, there's a lot of people, Bitcoin uses as much, power as pick your favorite country. But what they don't say is in comparison to the steel industry, or in comparison to the banking industry, or comparison to other industries. It's always about some small country that, in the grand scheme of things, uses a negligible amount of power in the world.
The machines, the hardware, are you guys only as good as obviously what's available? How do you forecast that? And then where have we come from in terms, for the last, 10 years or whatever, mining this stuff? How has the hardware and, been able to meet or exceed, kind of the requirements and expectations to mine?
Yeah, I mean, what's happening with the hardware, Adam, is it's just getting more and more efficient, right? So if you look at the S9, for instance, back in the day, which was kind of the workhorse of the mining world for the last bull run, 2017, 2018, people were buying them, and the prices started initially at like $500, and they were selling it for 5,000 at one point. And they were the kind of de facto miner for 3 or 4 years. They used about 1,600 watts of power for roughly 12 terahashes a second. So that's kind of what you're looking at in terms of output and input of power. The new S19s, which is a few generations later, these are Bitmain machines. The new S19s are using about 3,200 watts of power, and they're putting out about 100 terahash. So they're almost 10 times as powerful, but only use twice as much power. So they're 5 times more efficient. And that's because the chips are thinner. They're just better built. They're just overall a better machine. And that's only in the span of 3 or 4 years that we've made that jump over the technology cycle of 1 or 2 different technology cycles. So I think that's what you're going to continue to see with crypto mining, with Bitcoin mining, is machines get more and more efficient. It's going to get harder as the wafers get thinner, as you go from 7 nanometer to 5 nanometer, et cetera. But that's the big trend is needing, essentially less power per terahash, just getting more and more efficient. And then immersion mining is going to increase that efficiency, probably by another factor of 2x, because when you're cooling them in a really efficient manner, you can push them harder, get more hash power out of them for the same amount of power.
One thing that I noticed, and I've heard you say this too, is like, if you want to get good at something, you got to do it, like hands-on, figure it out, get involved. And I've noticed that like a lot of these operations, these facilities, people that are tuning in, oh, I want to mine. I think at one point I wanted to mine too. And it's funny because a lot of the stories, people were mining Bitcoin and they were messing around with it. And like that, the mining operation was kind of cool, 10 years ago. But what I've noticed on the bigger operations and the more scaled ones, like teams like yourself, is that a lot of them were already mining or into kind of the understanding the ASICs and the operations. And this was just another challenge, another project. How do you explain kind of the culture, or not the culture, but, the people that you work with and where they came from, that it wasn't just maybe overnight, into mining?
No, it's a good question and a good point. And yeah, and that is something I believe, that, you really only get good at things by doing them. And the idea that some hedge fund manager in New York can, buy a 10 million or 20 million or $100 million worth of machines and send them to somewhere to be hosted and run them, and they're going to get the same kind of output out of those machines as a company like us, which is what we do. I think it's pretty clear how I feel about that. I mean, we're experts in mining, and we know how to run the machines. And that's because, our team, starting with our CTO, Perry Hottie, has been mining, going on 10 years now. Perry was mining in his basement with GPUs, back before anyone knew what Bitcoin was. And so he's taken that experience and that knowledge, originally in his basement, and then in our prototype facility in Quebec, and then larger scale, and now in Texas. I mean, we've gone from, being able to tap into his 200 amp service at home to half a megawatt at our prototype facility, to 5 megawatts, to 20 megawatts, now to 200 megawatts. So you learn things as you scale, and you learn things by doing. And that's how we definitely approach mining. And so far it's worked.
And it kind of, I add another question, but that kind of answers it, right? Like if people are getting into the space and they're all about Bitcoin and, wanting to invest in it, they have 2 options. One, they can buy it, or they can mine it. And so what I'm hearing from you is like mining, a little bit more investment up front, you're going to have to work for it, as opposed to just, straight up buying Bitcoin and buying and holding it, which is a lot easier than running an operation. How did you guys determine, like, I guess that's your experience, right? You knew what was up, you started in mining, and you just because of your experience and depth and knowledge, determined determine like mining is the best way for us to earn Bitcoin in rewards as opposed to buying it?
Yeah, I mean, we initially launched the company back in 2018 as a mining as a service company. So we were selling packages for folks, you've seen those like cloud mining and, letting people mine from home using our software or our hardware and our software, sending it to their wallets. And the economics, on those are really tough on that type of business. It's like either the company is doing too well or the person who signs up for the package is doing too well. And it's hard to get the balance right. And things shift over a period of months and years. So it's a tough business. So we decided to do what we do well, which is, exactly what you said, scale, like mining at scale for ourselves. I think, what's unique about our model, and it's not only us that are doing it, but there's other publicly traded miners out there that are, tapping into the capital markets, being a publicly traded company, using the traditional, equity world and capital markets world to then combine that with cryptocurrency mining. So you're kind of getting them both, the exposure. You're kind of combining this old world and this new world, and it's been an interesting model for us. It's a really efficient way of raising money and of scaling and of telling our story. And if you can deal with the regulatory side of things and making sure that you're compliant, with groups like the FCA in the UK and the SEC in the US, then it's a really interesting model. And we're doing that model with this ESG kind of outlook, really trying to be a green miner using renewable power, being upfront about that and transparent about how we're using power. And then, we have something that we call our smart growth approach as well, which is not just looking for the best, or not just looking at scale and not just looking to grow for the sake of growth, but to really have a focus on ROI. Because at the end of the day, crypto mining is about taking capital, investing in it, like you said, investing it into machines, getting Bitcoin back, and then either holding onto that Bitcoin or reinvesting it into more machines. So we have a really strong focus, Adam, on ROI, on how quickly we are able to get a return on investment to any machines, any CapEx expenditures that we have on the machine side. And I think that's what sets us apart a little bit from the other folks is we really focus on right machines, right time, for the right price. And some folks are other companies are a little bit more focused on just scale at any cost, but in such a cyclical industry, it's important you get the cycles right as much as you can.
Going back to like the equity, which is interesting. What did you learn from that experience on raising money? What were the discussions? What type of profiles were coming in? Like, obviously interested. Were they on one end of the spectrum early days, like against it, and now they've come full circle into Bitcoin? How were those discussions on raising money for a mining facility operation, and specifically, obviously, for Bitcoin? Were they a lot of believers? Were they just entrepreneurs and like, hey, let's experiment with this thing? I'm curious to know, how that went.
So I think it's a good question. And I think we've had like a lot of different types of investors over the last 3.5 years as a publicly traded company. When we first started, we had like high risk, high reward investors, people who are like, hey, this looks interesting. We're a hedge fund, or we're, running a family office fund. We're going to put some money in because we think Bitcoin might turn into something. This is cool. Let's do that. And that was, through our UK, capital markets people and the UK broker. And that was that world. And then, and those guys, they're interested in a kind of like a 6 to 12 months, 6 to 18 month timeframe. So most of those guys are gone now that we're 3.5 years in.
Yeah.
The next group of people are the group that I find really interesting, which is like early retail folks who are like, in the old days, they would have been like scouring the newspaper, trading penny stocks, but now it's no longer penny stocks. It's like crypto, cannabis firms. And like, they're looking for companies with high growth potential that are early stage. And that's who we attracted. And I love those investors. Like they learn about the company, they ask good questions, they show up at things like the AGMs, they send in emails. And so we've tried to engage with them. And in our case, because we've been listening in the UK for the last 3.5 years, these are mostly UK investors. We do have an OTC listing in North America, so there's a bit of that. So that's been a really worthwhile, interesting group of investors to engage with. And a lot of them are still around. A lot of them are believers, and some of them have done well because given where our share price has gone over the last, year, 8, 9, 10 months. And now there's kind of two new groups of investors. One is the new retail folks who are like, oh, crypto, oh, interesting. And they're not quite used to the, like, one of my favorite crypto videos is like Mr. Bean in the movie theater. Have you seen that one where he's like on this wild ride and there's like all of these things and he's just loving it. And he's like the experienced crypto investor. And that's what it feels like sometimes, right? It's a volatile space. And some of the newer shareholders, they're not quite used to that volatility. And so that's it's kind of par for the course in this particular space, right? And then the last kind of type of shareholder I would say that is out there is like the new institutional shareholder, which is also a really interesting group because they are very keen on learning more. They're taking baby steps, but a lot of them have, access to deep pools of capital. And I think we're seeing those, and I'm talking about the space in general. I think we're seeing more and more of those types of companies taking baby steps into kind of engaging more in the crypto space.
And maybe this kind of goes back to my other question. Same question is like, why now are they crypto holders? Why are they investing in like a mining company? Why not, I don't know, a digital asset manager or something like they're getting exposure this way. What are some, I don't know, some of that thought process of where they want to get exposure. Obviously it's probably mandate thesis, maybe they're trying to go more infrastructure. It's kind of interesting though.
Yeah. I think people invest in us because they see us kind of like junior gold miners, right? So when gold does well, we do well. And you see that our share price is to a certain extent correlated with the price of Bitcoin. When Bitcoin goes up, we go up and vice versa. And then we're kind of judged against this other cohort of publicly traded companies. And we're all different. We all have some similarities and we all have pretty significant differences. So there's a group of us that are traded in different markets around the world. And why do people invest in us? I think they invest in us because they see, an opportunity to get exposure to crypto without necessarily having to hold the underlying asset. Not everyone is comfortable with, or can, depending on, funds sometimes are not allowed to buy Bitcoin because of certain, rules. People buy Argo and they put it in their 401k or their ISA in the US or in the UK or in Canada, their RSP. Like there's different reasons why people, use us as a proxy or use us as a kind of an arm's length investment into crypto. And some people just love the company and they love the story and they get the business model. And I think that's important too. They see that, the kind of margins we're putting out, the kind of opportunity that there is for growth. They get excited about that.
Cool. And you bring up some good points in terms of what their mandate is, or how they can get involved with crypto may not be directly, so they got to go other areas, get a piece of the action somehow, some way. What about like on my financial services side or solutions for mining companies in general? Borrowing, lending, I don't know, credit financing. Is this kind of a new, wave of business that obviously maybe traditional banks aren't looking into, but there's other financiers out there that are willing to, allow different collateral, right, to be put up for financing stuff? Is that kind of a new wave?
We're seeing it already, right? I mean, groups like BlockFi, Celsius, and the like, they're out there, lending and borrowing against Bitcoin, USD or even other coins. And then there's the whole kind of DeFi world, like the DEX world, where people are, putting up, adding liquidity to pools and in exchange for that, making really good, return, generating really good yield. So I think that's just going to continue to grow. I think it's going to carve out market share from traditional finance. At Argo, we think of obviously our primary business is cryptocurrency mining, but we're also engaging in other parts of the space, what we call like the Web 3.0 space. And I kind of had this realization maybe it was 6 months ago or a year ago, where, we started talking about the power of like Web 3.0 and the power of the internet to do the same, to have the same disruptive force to money and finance that it's had to, first information and then second communications and commerce. Like you think back to when, I was in my 20s and I started using the internet and what it did to information and how like the information, I don't know how old you are, Adam, but like the advent of the information superhighway, that was a big deal. You could all of a sudden find anything about, you could Google anything about World War I and have it at your fingertips without having to go to the library. That was a big deal. And then,
For sure.
And then along came Web 2.0, which was like, oh, wait, we can actually interact with this thing. We can actually, buy and sell things. We can, the Internet of Things arrived, and we can engage with each other in social media, like that whole world. And then the excitement is all of that kind of disruption that brought to those two aspects of our world and our economy, I think are coming to money and finance. We really haven't disrupted money and finance at all. It's the same model. Mm-hmm. And fintech has had this promise of, being disruptive, but essentially it hasn't. But DeFi is fintech when and I'm stealing this from someone else, but essentially DeFi is like what fintech always wished it could be, which is a truly disruptive force in money and finance. So we're excited about that as a company. I'm excited as a person. It's interesting to see where it's going to take us. It's still early days. There's still different use cases that are trying to be figured out, other than beyond the most obvious of lending and borrowing of stable coins, which is still a good use case. But there's obviously other smart contract applications that can be built on various networks, obviously primarily Ethereum. But we're watching it closely, and we're hoping to participate in it.
Yeah, I mean, I think on the fintech side, it kind of chipped away at the banks for a period of time. It was kind of cool, and then it's kind of slowed down. Banks didn't really innovate or didn't think this digital wave was going to like impact them as much. And you can kind of see a lot of these fintech apps coming out. And as you just mentioned, I think DeFi is now really, showing some promise there. A few other questions as we kind of wrap this up in a little bit. How do you manage? 2 questions on this one. How do you manage like liquidating Bitcoin or not liquidating it? And then 2, some of these price swings and like the volatility and stuff, do miners have an effect in terms of bear markets? Now they're starting to sell. That whole kind of, logic. How does that play out in general? 1, how do you guys manage that on your Bitcoin? Sure. I'm assuming, I'd want to hold it obviously forever, but you got to liquidate some things. And then 2, on the grand scheme of the mining community, do they swing the price in terms of, like crazy shit happening where they just gotta, make some moves?
So on the first point, there's the traditional model. And again, it's a new industry, so it's hard to say traditional, but traditionally Bitcoin miners, mine Bitcoin, they sell enough Bitcoin to cover off their operating costs and they keep the rest. And that's what we did for 2019, 2020. Miners that have access to capital markets, which is us in 2021, because our share price has appreciated. We did a couple fundraisers. We were in a better capital position than we were in 2020. We as of the last, announcement we put out to the market, which was at the end of June, we haven't sold any Bitcoin in 2021. So every Bitcoin that we've mined, we've kept. And we've been using either debt or equity raises to pay our operating costs and to buy machines, et cetera, which is, again, you're right. At some point, miners would likely have to sell Bitcoin. But if you've got a really, deep access to debt and a really deep access to equity, why would you ever sell Bitcoin if you think of it as an appreciating asset and that you look at cash as a melting ice cube? So we don't like to bet against Bitcoin.
For sure.
Whenever we can, we want to hold on to as much as we can. So that's kind of how we approach it. So there's those 3 kind of things that we have in our toolbox: selling Bitcoin, which generally is the last resort, depending on market conditions. Debt, accessing debt. We can use our Bitcoin for leverage. We can use facilities. We can use machines for leverage. There's ways to use debt in an intelligent way. And then the last one is accessing, capital through equity, through raising equity. And again, that there's pluses and minuses to that, as well. So those are the three ways in which we look at kind of our use of Bitcoin and capital. To answer your question, and obviously this is like a big question for the space in general. Do miners have an effect on the price of Bitcoin because of the machinations of their balance sheets and how they buy and sell Bitcoin? And there's always rumors about F2 pool or this pool or that pool selling. So the short answer is I don't know. The short answer is I don't have any specific insight into what other miners may or may not be doing and how they're affecting the market. I think that the market now is sophisticated enough and far enough along, and there's less and less Bitcoin that's coming out, given we've already mined 18.5 million of 21 million. The majority of Bitcoin the vast majority of Bitcoin is already out in the world and being traded and is having all of the effects of, normal market forces on it above and beyond mining forces. That being said, when there is a big event like what happened with China, miners coming off, and again, I don't have any special insight, but I would imagine that if you're a Chinese miner and you're sitting on a big chunk of Bitcoin and you need to move machines or you need to kind of protect your downside for a bit, you're going to probably want to sell some Bitcoin, hold some cash so you can pay airlines to move your rigs or whatever, pay CapEx on a new build out, whatever it may be. So again, I don't have any special insight, but those are just the kind of my observations from 35,000 feet being in the space for a while.
Yeah, those are all logical. Those make sense. And the question was just kind of more logically, right? The noise, the fear, and just normal market stuff, which is good. That's positive to know. Things happen and viewers that are watching are curious to know why there's swings, and we don't know. we have no idea. But now that I'm talking to somebody kind of in the mining space, that's kind of a cool question to ask. What are some of the impacts of just normal operations, normal industry stuff, without predicting or forecasting anything? But so that's good, and I appreciate that. Regulation. Is that hindered? Are they opening up? Do you but do you collaborate, with various contacts to kind of maintain, regulatory? I know you guys are compliant and all that, but how does the noise, and we hear about this all the time, right? These bills and politicians and against it, for it, and it seems like everybody's coming around, but you're at the core of it. So is it stunting growth? Do you think we're in the right direction?
Yeah, look, it's an interesting question. And whenever the term regulation comes up, people use it as like a catch-all. Like, what do you think about the regulation of the industry? And the fact is there's a lot of different regulatory levers that are out there. There's obviously, groups like the SEC and the FCA in the UK that regulate markets. There's national, state or provincial, and then municipal governments that do regulation. So I think there's a lot of different forces that are at play. I can talk about a few of them. I don't know the SEC and the FCA's long-term take on DeFi or Bitcoin. And, all I know is that they're studying it. They're looking at it. You have to believe that the SEC has some smart people in there. Current chair used to teach a course on blockchain. Everyone always brings that up. So he knows the space and his thinking is thoughtful about it. And I think more thoughtful than potentially, previous folks who were in that role. In terms of the FCA, we haven't had any issues, being doing what we do in the UK, and so I don't foresee any. In terms of national, state, or provincial, or municipal, let's start at the municipal level. Municipal governments either like you or don't like you, depending on how you interact with them and how you engage as a corporate citizen and as a community citizen. So, in the communities where we work, we try to build relationships with local government and make sure we listen and we engage in the right way, and we give back when it's appropriate. So I don't see any issues with any of our particular municipal relationships. They all seem very welcoming and happy with what we're doing. Provincial, state, obviously Texas. I mean, it really goes case by case. Texas, super welcoming to blockchain and crypto. New York State making a bit of noise given some of the challenges some of the miners have had with local communities and some of the back and forth. So, hard to say on certain states. Kentucky obviously seems to be very open to, again, it's a state by state level, province by province level. And then a national, I mean, I haven't seen anything to tell me that there's going to be any kind of large national regulatory forces at play. That's not to say that federal governments might be thinking of other than what we saw in China recently. That's the biggest move by a regulator, which is one of the most powerful regulators in the world, the Chinese government, to say, we don't really want Bitcoin mining here anymore. And even though it was a bit ambiguous, it was taken enough by local governments and by miners that it meant they needed to get out, and they needed to find another place for their machines. So I don't know if that answers your question. It's a bit of a kind of a wishy-washy answer, but there's a lot of gray, Adam. There's a lot of gray on the regulatory front, and I think it's really a case-by-case basis how you handle it and how you're building relationships with those various governments and regulators.
No, for sure. It's a layered like complexities and who's involved, who's not. We have some jurisdictions and some counties and some states that are pro. We have some that are not. So it is all over the place. And I think one thing which is kind of cool, and maybe a lot of people that are watching are like, well, what happens if the government does shut it down? Well, China did. And the one thing with Bitcoin is you can't turn it off. So, the worry about that is, this thing keeps running. Exactly. It's decentralized. It just gets, allocated elsewhere. But in general, you can't turn off Bitcoin. So those that are worried, obviously there's hard times, there's difficulties. And a country can impose restrictions, but it doesn't mean like the rest of the world or the Bitcoin network is going to come down, which is kind of cool. So I think, we've gone over our time here, Peter. It's been a great discussion. We've chatted about kind of your path into blockchain, the mining industry as a whole, managing operations, the purpose of becoming a miner. One other question. Did you guys ever think of mining another coin or just Bitcoin?
We actually do. We mine Zcash currently, privacy coin. And we've mined, over the years, various other coins. We're opportunistic, Adam, about, what coins we mine. We obviously love Bitcoin, and it's the majority of what we mine, 85-90%. But we are open to mining other coins for sure.
Yeah. Awesome. Well, appreciate it. Where can people learn more about Argo and get updates and insights?
Sure. So our website, argoblockchain.com. We're on Twitter at Argo Blockchain, and my Twitter handle is at Peter G. Wall.
Awesome. So again, thank you, Peter, for joining us. Everybody tuning in. Hopefully you learned a lot. This has been a great discussion. First for me on the mining side, very intelligent, individual here that was able to break it down, help us digest it, understand it, what the hell is going on, Bitcoin and all the above. So hopefully you enjoyed this, and hopefully you're enjoying the conference, and we hope to see you again. Peter, we hope to have you back. If not you, somebody from your team. We do this every month, so we'd love to extend another invite and get updated on those fronts.
Great. You should have our CTO on.
Awesome. Yeah. That would be great. We'll bring on our CTO and we'll rock it. So everybody, thank you for tuning in, and hopefully you enjoy Reimagine 2021. You'll be able to catch this actually on our YouTube channel as well for free. The conference is for free. You don't have to travel. You can watch it at any time when this thing goes live. All right. Thank you, Peter. Have a good one.
Thanks, Adam.